It was 2013. A beloved American icon was on its deathbed. Hostess Brands, the maker of the legendary Twinkie, had crumbled into bankruptcy. Production lines had gone silent. The golden, cream-filled sponge cake was a ghost of grocery aisles past. Many saw a sad end to a classic story. But Dean Metropoulos saw something entirely different. He saw a brand with a soul, a piece of Americana sleeping. He saw an opportunity hidden in plain sight. This decision is the perfect snapshot of the man himself. It wasn't just a business deal, it was a statement. While others chased flashy startups, Metropoulos looked at what people already loved. His bet wasn't on a cake, it was on nostalgia and memory. The world watched, skeptical, questioning the wisdom of reviving a junk food brand. Metropoulos and Apollo acquired Hostess for $410 million, not to restart, but to re-engineer. Dean Metropoulos wasn't born into billion-dollar deals. He immigrated to the United States at 10, carrying an outsider's perspective and relentless work ethic. When you start with nothing, you learn to see value where others see none, and to make every dollar count. He watched his parents build a new life, a lesson that became his bedrock. He earned a BS and MBA from Babson, but his real education happened in the field. At GTE International, he was sent to Europe and, by his late 20s, ran European operations. He learned culture, supply chains, cross-border execution, a rare global perspective. His first acquisition came in the early 1980s, a cheese business in Greece. Small, calculated, but his. Payroll, sourcing, marketing, the bottom line. His real-world MBA. He felt the gritty reality of cash flow and tough decisions with his own money on the line. Those wins built confidence to target bigger companies. He wasn't just a numbers guy or a product guy, he was a hybrid. He could dissect a balance sheet while understanding emotional pull at the shelf. That blend became his superpower for charting paths back to profitability. Find iconic names, diagnose failure, bad management, bloated costs, inefficiency, and fix them ruthlessly. One defining early win: Pam cooking spray. A single product brand. He expanded variants, ramped marketing, improved distribution, ubiquity over reinvention. The outcome: a massive profit as part of a larger food portfolio sale. In 2007, Pinnacle Foods, a bundle of tired but famous pantry names. These staples suffered neglect. He arrived as a brand restorer, not a raider. Consolidate, cut waste, modernize product and marketing to reconnect with new consumers. He focused on cash flow and profitability. Fix the engine, then scale. In 2013, Pinnacle went public in a blockbuster IPO. Pabst Blue Ribbon, once a cheap beer for old men. A subculture adopted it. He leaned in with grassroots anti-marketing, sponsor scenes, not Super Bowl ads. Respect the consumer. Result: a transformation and a reported $700 million sale. Hostess, acquired, re-engineered, public again by 2016, a highly profitable leader. His family firm curates iconic consumer brands in food and beverage, a focused, repeatable thesis. Even beyond the aisle, iconic assets like the Playboy Mansion reflect an eye for cultural value. His success is grounded in common sense, discipline, and human behavior, not speculation. Step 1. Find an undervalued asset with strong brand equity. Recognition is an unpriced asset. Step 2. Acquire, then execute a radical operational overhaul. Slash inefficiencies, eliminate sacred cows, and rebuild processes that serve the product and customer. Step 3. Reinvest savings into focused innovation and marketing. Make the old new again. Step 4. Plan the exit from day one. Value created, then realized. By boosting profitability and reigniting growth, he turns distressed assets into attractive acquisitions. It's disciplined private equity for tangible goods. Buy low, add immense value, sell high. Hostess stands as the crown jewel proof, engineered for durable cash generation. Lesson 1. Look for value where others see only problems. Run toward neglected opportunity. Lesson 2. Master operations. Ideas are cheap. Execution prints, cash flow. Lesson 3. Respect the brand's soul, but innovate for today. Lesson 4. Always know your endgame. Build with purpose, even if you hold long-term. Seeing hidden value. Fixing the machine. Reviving demand. That's how fortunes compound. Study how he thinks, because you aren't just building a company, you are building an empire.